Welcome everyone to this session on income tax information for seniors and retirees with Angel Eason. Thank you for joining us today on the last day of the Florida Equal Elder Law Justice Conference. Let me introduce our speaker, Angel Eason. Angel is an attorney at Legal Services in North Florida's low-income taxpayer clinic, where she focuses on helping people with understanding and addressing issues related to the federal income tax. Angel is a graduate of Florida State University's College of Law and earned her Master's of Law in Taxation from the University of Florida. Her focus is to assist low-income taxpayers in resolving disputes with the Internal Revenue Service. Since the pandemic, Angel's focus has been helping homeless individuals obtain their stimulus checks. So thank you for joining us today, Angel, and take it away.
All right, thank you. So a brief overview of what we're going to be discussing. So tax law, it's pretty complicated, and I figured if I tell you all the nuance of what's taxable, what's not taxable, and all the nuance qualifications of each individual credit, you'll all be asleep in the first 15 minutes or so. So this is meant to be a pretty broad overview as to where you can get help with tax issues, and then maybe what good resources are quickly accessible for people who do not practice in tax law. And then just a little bit about tax credits like the stimulus check, also known as the recovery credit rebate. Just really brief overview of some common taxable and non-taxable income issues for seniors. And then just being aware of scams and things that are going on. There's quite a bit of ID theft. And then I'll end with kind of circling back to resources as to where you can get help and good resources to have. So on the PDF section in the educational portal for this session, I've uploaded a publication by the IRS. I think it's called Tax Issues for Seniors. So a lot of what I'm covering is covered in a lot more detail in that publication. So go ahead and take a look, and the IRS publications all have pretty nice layout of table of contents, so you can just skip to whatever it is that you're looking for, and hopefully you'll find an answer there. And during the presentation, please do ask questions, and Kathy will stop me and I'll try to answer your questions when we're talking about a particular topic. I think that'll be helpful. So to begin, where to get help with tax issues. So a lot of questions I think that I get from seniors are basic tax return preparation questions. So FIDA, TCE, and AARP, which is usually an organization that helps with taxpayers over 50, and they would also help with the tax preparation part. In 2021, I know at least in Leon County, the FIDA program was kind of lacking volunteers who are willing to meet in person, which I think most of the seniors do prefer meeting in person still, and may have a tougher time doing the returns virtually, where they would have to upload their documents, their ID, and e-sign a bunch of stuff. That seems to cause a little bit of difficulty, especially for my senior clients. So, but that is definitely an option with FIDA, where there's FIDA virtual programs where the seniors can upload all their documents. And then there's always the free e-filing website on the IRS website. The IRS website is super useful, and it has the free filing portal, and I'll walk you through that in a minute. So where the low income taxpayer clinic comes in is generally if the taxpayer has some issues after they file returns, or maybe with a denial of a tax credit. So for 2021, one common issue was if the senior didn't have to file, but they were denied the stimulus check or didn't get the stimulus check, or maybe they were required to do a ID verification because they didn't file their return for the last, I don't know, several years, and then now they're filing a return just to ask for the stimulus check. So those are some of the issues that we help with. The Low Income Taxpayer Clinic also helps with maybe disputes with denial of any other credit, like earned income credit or any assessment of taxes due. Maybe collection issue, maybe the taxpayer agrees with the assessment, maybe they now realize that they shouldn't have claimed a certain dependent, but they have no way of paying the tax due. Then the Low Income Taxpayer Clinic really helps navigate that and goes through the different possibilities and the different alternatives to see what will work best for that particular client. And we also provide education related to tax issues. So this is an example of education. And then we also do outreach, which is more like going to the homeless shelter and helping with tax issues in that population, or maybe going to the senior center and having a clinic there to help with tax issues there. And I apologize, I do have a little bit of a cold, so I'm gonna have tea every now and then. So the Taxpayer Advocate service, they help in certain circumstances, especially if the person is going through a hardship, maybe eviction or something, and for whatever reason their refund is delayed, then the Taxpayer Advocate service can help to expedite that sometimes. So, and at times, if the Low Income Taxpayer Clinic can't resolve any particular issue, sometimes I will refer the case to the Taxpayer Advocate service to see if they can resolve it any faster than I can. So during grant year 2021, this is just an overview of all the low income taxpayer clinics in the US and how we have helped taxpayers. So like 5.8 million refunds secure for low income taxpayers and over $116 million liability decreased or corrected. So those are huge numbers, and that's what we're here for, to really help low-income taxpayer clinics navigate the confusing world of federal income taxes. All right, so I'll start with the most most requested help that I got in 2020 and 2021 related to the recovery rebate credit, or the stimulus check. So it's called a stimulus check. Actually, it's really the economic impact payment, but I think most people know it by the stimulus check. So here's a table for the first stimulus check as to how much they're going to get, and then each qualifying child, how much they're going to get. And stimulus number 2 is $600. Stimulus 3 is $1,400. So with this amount, the first two is really a advanced tax credit for the 2020 tax year. And then the stimulus check number 3 is an advance credit for the 2021 tax year. So for most seniors who are receiving Social Security and they don't have any other income and they're not required to file, they should have received the amount automatically. Sometimes that didn't happen for whatever reason. Sometimes there's seemingly no rhyme or reason to it, but the senior just simply didn't get the stimulus check that they should have received. And in that case, I would just help them file the required return. So let's say they received $1,200, but not the $600. Then I would help them file their 2020 tax return and just ask for that $600. Or maybe they didn't receive the $1,400, then I would help them file their 2021 return. And then if they are receiving Social Security and didn't file any tax returns, then the IRS wouldn't know if they have any qualifying dependents. So let's say they're caring for their grandkids, and the grandkid lived with them all year in 2020, but the taxpayer didn't get any of the stimulus check for the grandkid who they're taking care of, then a return would need to be filed to claim that dependent on the 2020 return. Or if it's related to the third stimulus check, then the 2021 return. So to be eligible for the stimulus check, the rules for all three are basically the same. There are differences across them. So they have changed the income limit in which someone can get the full amount of the stimulus check. So if it's above that income limit per the filing status, then there's a phase out by 5% of the amount of which your adjusted gross income exceeds the applicable threshold. Now that doesn't apply to all my clients, of course, because it is a low income taxpayer clinic, but it's just something to be mindful of. If someone is coming to you and saying, hey, I didn't get the full, let's say $1,400, it might be because their adjusted gross income was too high. So how to get the recovery credit rebate if the person says they didn't get it? So there are a variety of scenarios. What I generally do when someone comes to me and they say they didn't receive the stimulus check, I would ask specifically which one, if they received any of them at all. If they filed their 2018, 2019, 2020, and or 2021 return, because all the stimulus checks are supposed to be based on one of those returns at different time period. And if they receive any federal benefits, such as Social Security or disability, in which case they should have received the stimulus checks automatically. So sometimes, again, when maybe they receive Social Security, but they didn't get the stimulus check, then definitely need to file a return. But before I do that, I would go ahead and check their transcript. So I can, as a tax practitioner, I can just have them sign a form 2848, giving me authority to speak to the IRS and pull their transcript online. But without being a tax practitioner, the person can actually just go to irs.gov and open an account and check their transcript. So the IRS website is really super useful in that you can get your tax record, and first the person has to set up an online account to be able to do that. The online account process could be a little confusing, so maybe the senior would like a little help with that. If they run into trouble, and where can they get help with that? So that's just something to be mindful of. And the other thing to note is, once a return is filed, the person can get their refund status by just entering a couple of information. So just click on check my refund status. And it'll ask you for what tax year, Social Security number, filing status, and the exact refund amount. And then you would just click submit, and it'll tell you if there's a status that the IRS can tell you about. Sometimes there may not be. And if the person filed an amended return, you can also check the status here. But a lot of the information that you might ask for would be on the IRS website, and they try to really lay it out for a taxpayer to use. So if you have a bunch of questions about the stimulus check or maybe the child tax credit, they have a bunch of frequently asked questions and answers about that. And then they also have news and video. So I just wanted to introduce the IRS website because I think it's really laid out well for taxpayers to get answers, and maybe for all of you to help people get answers. All right. So if the recovery credit rebate or the stimulus check was issued, but the person didn't get it, it could be because the person moved. So let's say the person filed their 2019 return, and because the first two stimulus check is based on the information on that 2019 return, maybe the check bounced back to the IRS and was never cashed or delivered. Sometimes if you look at their transcript for 2020, you'll see that the stimulus check was issued. However, it was undeliverable and returned to the IRS, in which case you would just file a 2020 return asking for that amount that was not received and undeliverable. However, if the transcript actually says, hey, the IRS issued it already, maybe a year ago now, and it doesn't show any indication at all that it was undeliverable and returned back to the IRS, then the person really needs to submit a Form 3911 taxpayer statement regarding refund to request that the IRS conduct a refund trace to see if the check was cashed or not. If it's not cashed, the person still has to do a 2020 return if it's for the first two stimulus check, or the 2021 return if it's for the third one. The same thing can happen if the person changed their bank account during 2020, 2021 tax year. Maybe it was direct deposited into a bank account that's no longer open. So what would happen if the transcript says that it was issued, but the person, the stimulus check was issued, it doesn't show that it was undeliverable and returned to the IRS, and then you go ahead and file a return asking for it. So what would happen is the return might get stuck at the IRS in a math error department, because according to the IRS, the stimulus check was issued. However, the taxpayer is now asking for it. So there's a mismatch of what the taxpayer is asking for and what the IRS record's showing. So generally, it will result in the return being stuck in the math department for a while. And the taxpayer will probably get a letter from the IRS saying, hey, we deny your request for this amount of the stimulus check because we're showing that it was already issued and that you have to do the refund trace request. So what I found is more efficient to go ahead and do the refund trace first, and then once you get a response, hopefully saying that the taxpayer did not get the amount, then you would file the return, because now the IRS has records saying, hey, we issued a stimulus check, but no, it was not received. So the taxpayer can go ahead and ask for it. So what happens if the refund trace shows that the check was cashed, or maybe the direct deposit went through to the bank? Then the Department of Treasury will step in and send the taxpayer a package of, hey, this is what we found. Let's say it's a bank account. We see that the stimulus check was deposited to Bank ABC into account number 123. And from there, the taxpayer will have to show that maybe this is not their account, maybe it was an error, or maybe it was closed after that time. So it has to show the Department of Treasury that no, it didn't go through and they didn't get it, in order for them to actually get that stimulus check. So it could be a battle, and it could be interesting for sure. All right. So the other reason that maybe the person didn't get the stimulus check is because the person again hasn't filed a return for quite a while, or there's some other ID theft issues. And in which case, the IRS could have sent the taxpayer a letter asking for ID verification. And in the past, I guess it really is still currently, it could be a long process because it's really hard to get someone on the phone to conduct those ID verifications. And at least in some offices, it's really difficult to get an in-person office visit with the IRS to conduct those ID verification. So the low-income taxpayer clinic in Tallahassee has established, along with other low-income taxpayer clinics, on a trial basis to actually help the IRS conduct those ID verifications. So now I can really review all the different forms of ID, let's say birth certificate, social security card, maybe a lease agreement with the taxpayer's name, their photo IDs, of course, and any other information that would kind of lead me to do my due diligence to say, hey, this is who they say they are, and send a form back to IRS to confirm that, hey, this person requested for this refund amount, and to go ahead and release the funds because the ID verification was conducted by us, the low-income taxpayer clinic. So there are questions that popped up in the last couple of years as to what happens if someone died in 2020 or 2021, and do they qualify for the stimulus checks? So I put a brief kind of summary here. If the person died in 2020, then they would still be able to, I guess not the person who died, but their representative or maybe their spouse can still ask for this first 2 stimulus check. If the person died in 2021 or thereafter, then they would qualify for all 3 of the stimulus checks. And more on decedents, not only because we're talking about seniors, but because of the pandemic, it seems like there are just unexpected deaths around the last couple of years. So the final return for the decedent, it could be filed by the personal representative of the decedent's estate, and that's generally through a will or court-ordered personal representative or the surviving spouse. And the person would just enter deceased in the decedent's name and the date of death across the top of the tax return. So generally, I would use a tax software, and they would ask for the date of death, and the software would do all that for you. And the surviving spouse can file a joint return and sign the return as filing a surviving spouse. So I put in a publication number here. Again, the IRS publications are usually pretty detailed. It has a bunch of worksheets and a lot of definitions and explanations that might be useful if this is the topic that you're looking for. The surviving spouse, the year the spouse died is the last year to file a joint return. So there's often this confusion for the surviving spouse as to what would be the correct filing status after their spouse passes away. So let's say the spouse died in 2021, that would be the last year that the surviving spouse can file a joint return. For subsequent years, if the surviving spouse does not remarry, they can file as a qualifying widower, head of household, or single. So qualifying widower and head of household will require a dependent. So just be mindful of that. If the surviving spouse remarries before the end of the year in which the spouse died, so let's say the spouse died in 2021 and the surviving spouse remarries in 2021, then the surviving spouse cannot file a joint return with the deceased spouse, but can file a joint return with the new spouse. So the other common question that I get relates to grandparents as parents. So there are a variety of reasons as to why this happens, and I'm sure you're all kind of familiar with some of the scenarios in which the parent can no longer care for the child, and the grandparent, or maybe another non-parent figure like an aunt, uncle steps in to care for that child. It could be the death of the parent, maybe incarceration, mental health or substance concerns or abuse, some kind of domestic violence, homelessness, even military deployment. So some stats on the US, in 2020, US has 2.5 million grandparents as primary caregiver to their grandchildren, which is quite a lot. And I think that's why I get so many questions about, can I claim my grandchild? Or what happens if the other or the child's parent claim the kid, even though the grandparent has been living with the child and paying for all of the child support the whole entire year? What can be done about that? So some tax credits that a grandparent can get, or just a non-parent caregiver, are child tax credit and additional child tax credit, earned income tax credit, child and dependent care credit. They can also qualify for the head of household status. So just a brief overview about the different tax credits and their requirements. Again, I don't want to put you all to sleep. So the child tax credit and additional child tax credit, actually along with the earned income credit, really aims to lift people out of poverty by using tax credits. The child tax credit was established as part of the 1997 Taxpayer Relief Act. It's generally a non-refundable credit. So what that means is the person has to have some kind of income and have to have taxes due. So let's say they have $1,000 of tax due and they get $1,000 in child tax credit. That's non-refundable. The $1,000 will reduce that amount of federal income tax that's due. So they would essentially zero out the amount due and hopefully get other refundable credits after that. So in 2001, the additional child tax credit was enacted to coordinate with the earned income credit, and this portion is refundable. But it still required the person have a minimum amount of income for them to qualify. So for tax year 2021, as part of the really COVID Rescue Plan, or the American Rescue Plan Act of 2021, it temporarily expanded the child tax credit and temporarily made the credit fully refundable. So the person doesn't need to owe any federal income tax. So they didn't have any income requirements. So in 2021 only, even if they normally wouldn't file a return because they're not entitled to any of this credit, the person will want to file a return if they have qualifying dependents to go ahead and ask for the child tax credit. And according to their surveys and data, the child tax credit were used primarily for childcare, food, housing, and other basic needs. And here's a chart of food insufficiency for adults in households before and after the child tax credit. I thought this is kind of interesting in how, so this is for all adults, and this is after the advanced child tax credit popped in. It decreased the food insecurity in the household. And it's really a much bigger shift for people with children, because those are the people who are receiving the child tax credit, the advanced child tax credit, during the last 6 months of 2021. And it really didn't make a whole lot of difference at all. There's actually a slight increase in adults in households without children. as far as food insufficiency is concerned. And this is a similar chart for difficulty paying expenses for adults in households before and after the advanced child tax credit. So the advanced child tax credit is when the IRS took half of the expected child tax credit, and that's based on the person's 2020 tax return, and issue that over a 6-month period. And so that's the advanced child tax credit that's shown here to have benefited the food sufficiency, and then the ability for someone, especially with children in the household, to actually pay their household expenses. So the chart show that it did basically what it was intended to do. So the families who qualify for the child tax credit based on 2020 tax return received half of the total credit in advance monthly payments. And so the second half, they're going to have to claim on their 2021 tax return. And you'll reconcile that. So let's say they have one child and they were entitled to $3,000. So they would get the $1,500 in 6-month monthly period. And then the other $1,500, the person would ask for on their 2021 return. Again, that's even if they have no filing requirement, they will need to file the 2021 return to ask for the full amount of the child tax credit, or else they just won't get it. Some life changes that could result in excess advanced child tax payments. So I think I see this a lot with kids who are moving from household to household for whatever reason. So let's say a qualifying child lived with the taxpayer in 2020, but in 2021 moved back in with the parent or lived somewhere else. Then in 2021, the taxpayer wouldn't be able to claim the kid as a dependent because the kid didn't live with that individual for more than half of the year, which is a requirement for someone to claim them for as head of household and earned income credit and for other purposes. It could be because the taxpayer's income dramatically increased to beyond the threshold in which they are no longer qualify for the child tax credit. Or maybe the filing status, the person changed, maybe the taxpayer got a divorce, or maybe other things happen. So that's definitely something to be mindful of. The last one is one that I don't see very often, where the main home was outside of the US for more than half of 2021. But I suppose that could happen. So in these cases, if the person was receiving the advanced child tax credit between July and December, but they don't qualify to actually receive the credit because one of those life changes happened in 2021, then they might need to repay that amount that they received. And all that is going to be reconciled in the 2021 return. However, because it is such a new law and the expected confusion, the legislatures did have a safety net as to if someone needs to repay the excess amount or not. So this is the repayment protection if taxpayers modify adjusted gross income is at or below a certain amount. So 60,000 if someone's married, and 50,000 if they're head of household, 40,000 if they're filing a single, meaning if they make below that threshold and they receive excess amount in advanced child tax credit because the kid didn't live with them in 2021 or whatnot, then they might not have to pay the excess amount back. So the next big topic is the earned income tax credit. And so in 2020, in Florida alone, there were 2.1 million returns with claiming the earned income tax credit, and a total amount of $5.1 billion in earned income credit were issued to pretty much low income, moderate income individuals. And the purpose of the earned income credit is to bolster the economic security of low income working families, especially those with children. By reducing personal income tax liability, low income tax filers retain more of their income. The amount of a tax credit is determined mostly by income level, marital status, and number of dependent children. So this is kind of similar to what we've seen so far with the child tax credit and the stimulus check, in which it really depends on if you have any qualifying children, how much income do you have, and what your filing status is. So in previous years, I think except for 2021, if someone is married filing separately, they will not be entitled to get the earned income credit. So here's a general qualifications and supporting documents that the IRS would ask for a person to show if they can or cannot claim the dependent. And each dependent is going to be looked at separately. So let's say a grandparent is claiming 3 grandchildren who all live with them, and the grandparent provided more than 50% or maybe all of their support for the children. The grandparent will need to show that they can claim the child, and by providing supporting documents for each children. So it's not like a blanket thing that can be shown. It has to be individual. Like the IRS will look at child by child. So I put this in here, and this is just one example of the form. Each credit and filing status, earned income credit and child tax credit, are slightly different in their qualifications and requirements and whatnot, but generally they're the same. So the form 886 there's one for dependent, and then there's one for head of household, and then there's one for earned income credit. But most of them are going to tell you basically the same thing. First, you need some kind of relationship. So for the dependent, it tells you if you're divorced, legally separated, living apart from the other parent of the child, claim on your return, then what you need to do. And then the supporting documents that you'll need to provide, like a divorce decree, separation agreement, current custody order, completed form 8332. And this is a form that's used if the parents are sharing, maybe alternating years as to when someone can claim the kid. And when they do that, it's not for all credits. So you can release the child tax credit to the other non-custodial parent. Non-custodial meaning they did not live with the child for more than 6 months of the year and did not provide more than 50% of the support. So those are the test. So that would be the non-custodial parent. The custodial parent can sign form 8332 to release the child tax credit. However, for head of household filing status and earned income credit, the custodial parent cannot release those because the requirement is that the child have lived with the parent who's claiming the kid for more than 6 months of the year. And then there's the relationship test, which is really the dependent generally has to be related either by blood or maybe through marriage or adoption. And then you'll be showing that by birth certificate or other official documents like marriage certificate to show that that's your stepchild or something like that, or a court order saying that maybe there's adoption or foster care or something. And then the big issue usually is, how do you show that a child lived with you for more than half of the year? So you could maybe submit school, medical, daycare, social service records that have the same address as you, as the taxpayer, not you in particular. So a letter on the official letterhead from a school, medical provider, social service agency, or place of worship that shows names, common address, and dates. And the IRS actually put in here, we cannot accept documents signed by someone related to you. So just note that. And then the other requirement is financial support. The child did not provide half of his or her own support for 2021. And then there are other requirements, but I put this in here to show you how the IRS generally lays out in a pretty nice chart as to what the requirements are. That would be the requirement, and you would look at the specific thing that relates to you, and then the supporting documents that they will generally accept. And so what the low-income taxpayer clinic does is walk the client through what the requirements are to get the facts, to then walk them through, okay, what supporting documents can they get and how to provide it, and then really put all that in writing and into a nice package for the IRS to say, hey, I can clearly show that this is the grandparent, let's say, and this child lived with the grandparent for more than 6 months of the year, and here are the records to show that, and the grandparent provided more than 50% of this child's financial support. All right, so that's a lot. If you have any questions, please, again, put it in the chat and Kathy will let me know.
No questions yet.
All right, I'll move along then. I guess I put everyone to sleep already. So
No,
retirement.
I think you've covered it thoroughly. So they haven't got any questions.
So retirement plan distributions, because we are talking about seniors, this might be a common topic. So generally, RA's individual retirement arrangement plans are taxable in the year that it's received. The exception, of course, is the Roth RA, in which it was taxed upfront. So what we're talking about is really the traditional RAs. Now, early distribution penalty amounts distributed before age 59 and a half is subject to an additional 10% tax penalty. And that could really add up quickly and really decrease the person's ability to, it usually is quite a shock when someone gets that 10% penalty and they weren't expecting it. So I put this in here because there is a coronavirus related distribution relief. So if the person is before age 59 and a half and they took out some early distribution, they could be exempt from the 10% tax penalty in very specific situations. So the person can elect to include the taxable amounts as income ratably over 3 years, recontribute the amount of the distribution to an eligible retirement plan within 3 years, and not subject to a 10% penalty for early distribution if, there's a big if it's a coronavirus related distribution. And what does that mean? The distribution was made in 2020, and the distribution was made to individual or individual spouse or dependent diagnosed with COVID. And the household experienced adverse financial consequences due to quarantine, furlough, laid off, or had work hours reduced because of COVID. So I think that's pretty limited in scope. So just be aware of that is out there, that is a possibility, but the person needs to meet all these requirements for the 10% penalty not to apply. So the other common question that I get is, are Social Security benefits taxable? And the answer is, well, it depends. Generally, for our clients, it's no, because it really relates to their filing status and how much income they have. So there's a somewhat complicated math to this. So basically, it's half of the Social Security income plus total of other income, and then you would compare it to the base amount here. So if the married filing jointly and their half of the Social Security plus their total other income is greater than 32,000, then a portion of the Social Security is going to be taxable. And same with single head of household. If their combined total income with the half of the Social Security is greater than 25,000, then some of it is going to be taxable. Now notice that if someone's married filing separately and they have lived with the spouse at any time during 2021, then the Social Security is going to be taxable because this base amount is 0. So just be mindful of that. If someone asks you, are Social Security benefits taxable? My response is generally no, but it really depends. So the other big question that I get a lot of is the sale of a home. So with a sale of a home, let's say the person is moving in with their kid because they're for a variety of reasons. It could be because they're having difficulty meeting the bills at this stage in their life, or maybe, who knows, maybe their kids need help. There could be a whole variety of reasons as to why someone's going to sell their home. So the sale of the home and the gain therefrom is generally taxable. However, it could be excluded. So how you would calculate the gain is basically, let's say you bought the house for $100,000 and you sold it for $200,000. The gain would be $100,000 would be taxable. However, if you lived there as your main home for most of the time in a 2-year period, and there's this funny thing about 2-year within a 5-year period, so you have to own the home for more than 5 years and live there for 2 years most of the time. Then you can exclude income from the gain up to $250,000 or $500,000 for joint return. And the 2-year period for seniors, what would be important is if they are in a nursing home or if they're in some facility because of their health situation. That doesn't count against a 2-year period, so it would be considered them as still living in their main home because they have the intention of moving back in to their house at some point. Now, reverse mortgage. Reverse mortgages are generally not taxable, and I'll just read you the definition of that. And the reasoning is a loan. So reverse mortgage is a loan where the lender pays you in a lump sum, a monthly advance, a line of credit, or a combination of all three, while you continue to live in your home. With a reverse mortgage, you retain title to your home. Depending on the plan, your reverse mortgage becomes due with interest when you move, sell your home, reach the end of a pre-selected loan period, or die. So it's generally not taxable because it's considered loan advances and not income. So since it's not a taxable income, the interest, including the original interest discount accrued, is not deductible in home mortgage interest like a normal home mortgage would be. All right. So some keys to remember if you're helping someone to file a 2021 return or a 2020 return. that would be kind of different than other tax years is that the child tax credit, earned income credit, and of course the stimulus check the rules are different for 2020 and or 2021. That's not applicable to any other tax years before. So 2020, 2021 tax years are kind of tricky because things were just different. The tax rules were really different, especially for 2021. Like the child tax credit, the person doesn't need to have income. That doesn't apply for previous years. And they would also need to reconcile the advanced child tax credit. That wouldn't be applicable to any other tax year. So it's really tricky. And what I really highly recommend is just to use a tax software. And again, the IRS website has a link where it has free filing portal, and it gives you different service providers for you to e-file your return for free. I think generally in certain circumstances, it's like below certain income and there cannot be any self-employment and that kind of thing. So I put in here review relevant rules for each tax year, but really strongly recommend going with FIDA or AARP. They're volunteers who are trained every single tax year, and the test to actually pass and be qualified to prepare returns for FIDA and for AARP are pretty difficult. I can say that even after practicing in tax law for quite a while now, it took me almost all weekend to pass that test for 2020 tax year. It was really difficult, and mostly because there were just so many changes that were completely different than all the other tax years. So I can't really base what I knew for previous years and just use it for the 2020 and 2021 tax year. It's like I really have to study it and know what the new rules are for the tax year that I'm working on. So really using a tax professional is great. And if someone doesn't have to pay for it, that's even better. Another option, again, is going to the IRS website and really just going through the link. And the softwares are great in that they will ask you questions. However, what I've seen with my clients is maybe they don't really understand the question and they don't really understand what the requirements or qualifications are. So for example, they'll choose a filing status that's not correct. So maybe they're still married on paper. They haven't received a separation decree yet, or and maybe they have lived together with the spouse the last 6 months of the year, and they went ahead and filed for head of household, or maybe filed a single, and really that's not correct. And the tax software is not really going to tell them that it's not correct. So it's like they have to really know what they're clicking. Another example is they think they can claim their grandkid or another dependent or maybe another relative. So they just check, yes, they can claim a dependent, and the software doesn't really go into too much detail, or maybe the client is just clicking through it without really thinking a lot about it and doesn't answer the questions correctly, in which case the software will make a wrong determination. And that's where I see a lot of clients come to the low-income taxpayer clinic to say, hey, I received a notice from the IRS saying that this is not correct, or the refund is denied, or or maybe the refund was issued, and now they have a huge assessment because the IRS is saying that they are not entitled to the child tax credit, or maybe the earned income credit, maybe both, and maybe even deny their head of household status. And all three of those could have a really big impact on the tax assessment, especially when the IRS piles on penalty and interest. So really just be mindful. Tax softwares are definitely useful, but the person who's using the tax software really has to know what the tax laws are, because it's really easy to click that, yes, I have a dependent, and put in all their information, or yes, I can qualify for the head of household status. But if you don't, and the IRS comes back and asks you for supporting documents or whatnot, there just could be a lot of issues there. All right, and for especially 2020 and 2021, definitely check how much of the stimulus check and the advanced child tax credit were issued. Again, you don't want to ask for, let's say, $1,400 for the third stimulus check on the 2021 return, but the IRS is already showing that the $1,400 was issued. That will cause a delay because of the math error, and then the IRS will, again, generally just send the taxpayer a notice saying, hey, we already issued that amount and you're denied this request. And then the taxpayer will have to go through a round of refund trays and figure out what happened, and then go back and forth with the IRS, which is never fun for anybody, not even for tax practitioners. So really try to get it right to begin with to avoid any delays. Yep, and I already covered this. Have FIDA or other professionals prepare the return is really the best way to go, because it's really hard to keep track of all the changes, especially for 2020 and 2021. There were just a lot of changes, and yeah, it's been really, really difficult to keep up with all that. And to be able to guide my clients through all the different changes. So it's always like a research project when a client comes to me with issues. All right. So some common issues that I see are dependent was claimed by someone else. So that could happen between maybe parents. Let's say the custodial parent filed a return maybe a couple of weeks, a month later than the non-custodial parent, and figured out, and the return was rejected, because when you e-file, the IRS really does a relatively good job with comparing information to see if the return should be accepted or not. So if one of the dependents that's claimed on the tax returns already claimed by someone else, the e-file return will be rejected. The good news is the rejected return will say a reason, like the dependents already claim on someone else's return, then you'll kind of have a heads up. But if you claim more than one dependent, you wouldn't know which one. It will just say dependent was claimed, and you're going to have to figure out like which one and what you're going to do about it. But if the taxpayer is pretty confident and can provide supporting documents with that they are entitled to claim this dependent, let's say it's the custodial parent, the child definitely lived with this custodial parent for more than 6 months of the year, provided all of the financial support, and of course you can show relationship because it's the custodial parent. Or for grandparents, it would be the same thing. If the grandparent can easily show by birth certificate that there is a blood relation there, and the child lived with the grandparent for more than half of the year, and the grandparent provided all of the support, then what I would do is go ahead and prepare the return and mail it in by paper, maybe with some supporting documents, or usually a cover letter saying, hey, this is what happened. It was rejected because the dependent was claimed. However, here's the documents showing that the dependent is a qualifying dependent under the rules, and here's why. And just basically state the circumstances and the qualifications. Or it could be that after reviewing all the facts and circumstances for that particular tax year, that the taxpayer is not qualified to claim the dependent. Maybe the dependent only lived with them for first 5 months of the year and then moved back in with the other parent. So in which case, I would just help them correct the return and then e-file it after that and see what happens. So that goes with the claiming a child who is not a qualifying child. Another common issue is unreported income. So what happens is when you work for someone, your employer is supposed to send an information report to the IRS saying, hey, this person made X amount, and this is the federal income tax withheld. So there are times when a taxpayer will come to me and they think they have all their W-2s, all their 1099 showing all their income for, let's say, 2021 tax year, but they missed one. They totally forgot that maybe they worked at Walmart for a month out of the year and maybe made $1,000 or maybe more. Or maybe they worked for Uber as an independent contractor just for a couple of months of the year, and Uber sent a 1099 to the IRS, and now the IRS is coming back with a letter saying, hey, you have unreported income, and by our calculation, this is how much you owe us. So those are common issues. For previous returns, I think at this point in 2021, all the wage and income information that's reported to the IRS can be viewed online. So again, going back to the IRS website, a person can always look at their transcripts, and that includes wage and income transcript. So the last time I checked, the information reports are up online. And so the premise is really, that's if the employer actually submitted that to the IRS, and that's if the IRS actually processed it already. Last I heard, I think it was newsletter that went out last week, the IRS still has maybe 1% of information reports that's not processed, and they're putting that in the back burner while they try to catch up on all the unprocessed tax returns that are still outstanding. And I think they're still in the millions of unprocessed tax returns at this point. So the unreported income is going to, again, cause some delays or maybe an assessment. And that's something maybe the low-income taxpayer clinic can address. And really, it's all about providing supporting documents to the IRS to say, okay, this is what happened, this is what it is. Or maybe the taxpayer actually agrees. It's like, hey, I remember working for Uber, and oops, I totally forgot to include that in my tax return. And they agree with the assessment. In which case, maybe they just want to ask the IRS for a payment plan, or maybe to ask that the IRS maybe waive their penalty and interest because they just didn't realize and it's a first-time offense or whatever the situation might be. And another common issue is really for 2020 and 2021 tax year, there's this reconciling process that never happened before. Well, I wouldn't say never happened, but really doesn't apply to any of the other tax year, and it's pretty unique to 2020, 2021 tax year. And those amounts needs to match what the IRS shows were issued and what you're asking for. So again, the common situation is the IRS shows on their record that, let's say, the first stimulus check was issued, and you're asking for this first stimulus check again on your tax return. That's going to be denied, and it's going to really cause some delay in the processing. So when things like that happen, when there's a mismatch in information, or if the IRS is questioning whether you can claim a dependent, or maybe if you selected the correct filing status, the IRS generally will send notices out saying, hey, this is what we think is the correct answer, and this is what we think you owe us, or maybe we don't think that you're entitled to this refund and your refund request is denied. So what I've been seeing with my clients, especially the seniors, is sometimes they get really confused when they get notices from the IRS and maybe they don't even want to open it. And just because, yeah, I'm not sure exactly why that is. I don't know, maybe just an instinct that it could be bad news. But so really helping people just review the IRS letter carefully and see what the next steps are could be really comforting and helpful. So I've had quite a few notices. The IRS sent a bunch of notices letting people know, hey, we've issued the third stimulus check and this is how much you received. And then there's some extra language in there that really seemed to have caused some confusion. Or maybe, I think the letter that caused the most confusion was, hey, you asked for maybe the third stimulus check of 1,400 and there's no change to your request. So really, there's nothing wrong with the return and the IRS issued the 1,400 and there's nothing you need to do. But that notice just caused a lot of confusion to people and really there's nothing they need to do at all. Yeah, so just reading the IRS notice carefully and going through it with the taxpayer usually is super helpful just to see if this is something that they really need to work on, address, or whatnot. If the IRS is asking them to provide explanation or to provide supporting documents and to respond, definitely respond to that notice. The other thing that I see a lot of kind of panic is the IRS will say, you have to respond by, let's say, May 31st, and it's already, I think it's May 26th today, and you just received that letter. And so I have quite a few clients coming in kind of panicking about, oh my God, I'm not going to meet the deadline. And what I usually tell them is, yes, IRS letter put a deadline on there, but it's usually not a hard deadline. So yes, respond, but don't panic is what I'm getting at. Yeah, so always review and respond to notice as necessary. So one kind of neat tool that I want to share with you since we have a few minutes is the Taxpayer Advocate website. So they created this really cool taxpayer roadmap and notices from the IRS. And you can basically search for, let's say, a 90-day notice of deficiency. This is what you receive from the IRS. And you would click on field in the taxpayer roadmap and it'll see, show you notice details here. So it goes through, what does this letter mean to me? How did I get here? And what are my next steps? So I think that's super useful. And it even gives you all the publications that are relevant to this particular issue when you receive such and such letter. And then it has a thing called show on roadmap, which could be a little intimidating, but I just wanted to share how this works. Okay, so here's a 90-day notice. And as you can see, the roadmap's pretty complicated. It starts, backwards, sorry if I made any of you dizzy. All right, so it starts really with someone filing their tax return, or if the person didn't file any tax return and the IRS shows there's a filing requirement, the IRS can go ahead and do a substitute for return for the person. And that return will be only based on the information provided to the IRS without any deductions or anything like that. So let's say the IRS received an information report from Uber saying that the person received $10,000 in self-employment income. That's what the return would be based on. So, yeah, so the person can really deduct business expenses like fees paid to Uber and the mileage driven and all that can be deducted from the gross income. So in any case, this roadmap really shows, okay, this is where I'm at. I'm in the tax return process of maybe examination, assessment, and then this is where it can go to collection, meaning, okay, the assessment is made and
5 minutes.
okay, thanks. So the assessment is made, and okay, what are my collection alternatives? So I think this is kind of really helpful, at least from the practitioner point of view, as to what all the different letters mean and how do I move forward? How do I guide the client in the process? So I can't complete a talk without just a word about looking out for scams. So what I'm seeing with seniors in particular, sometimes they tend to get a little confused. So I had a client who received a bunch of notices, and so what happened was he owes money to the IRS, and the IRS placed a lien against his house. And all of a sudden he got a bunch of letters saying, hey, we can help, or we can help with the lien, or and he didn't really understand that those are not letters from the IRS, and they're just advertisements, even though the letter says they're advertisements. Those are the nice cases. There are also not so nice cases in which clients are contacted by email or text messages, or maybe even social media, asking them for kind of confidential tax information, or maybe just promising, hey, I can help you get the stimulus check, or maybe a number of other things. So really, as a general rule, the IRS doesn't initiate contact by email, text messages, or social media. Definitely look out for emails with attachment or links claiming to have special information about advanced child tax credit payments or refunds of child tax credit. If you receive any suspicious IRS-related email, see the report phishing and online scams for additional information, and I put in a link on the slide for you. So again, resources are on the IRS.gov and Taxpayer Advocate website. And just real quick, since I have 3 minutes, is the IRS did a really in-depth economic impact payment Q&A. So there are a lot of questions here, like if you click, so for the 2021 recovery credit rebate against that, that's the third stimulus payment. If you click on that, it has a bunch of questions, and you can find, hopefully, have your questions answered here. So I put a link on there for you with all the helpful information. And with, let's see, and I think that's it. I am right on time, and thank you. And let me know if you have any questions. Definitely reach out to me if there's anything I can help with.